Hey there, Build Wealth Now News, or BWNN. Welcome back to another live episode of Market Pulse. I'm your host, Billy Bob, and I'm thrilled to be joined by our very own market wizard, Sarah, certified financial analyst, chartered market technician, and the brains behind our deep dive stock analyses. Sarah, great to have you back.
Thanks, Billy. Always a pleasure. And hello to all our viewers. Glad you're tuning in today.
So, Sarah, let's start big picture. The market's been on a bit of a roller coaster lately. Tech leading, then pulling back, then rallying again. What's your read on the overall market conditions right now?
Great question, Billy. We're seeing a classic risk-on environment, but with nuance. The S&P 500 is holding above its 200-day moving average, and breadth is improving, especially in the tech and artificial intelligence or AI sectors. But volatility is still elevated. What's key is that leadership is narrowing to high-quality names, companies with real revenue, path to profitability, and strong balance sheets. That's where we're seeing capital flow.
And that brings us right into AI, the sector that just won't quit. It's been the engine of this bull market. But not all AI stocks are created equal, right?
Absolutely not, Billy. There's a huge difference between AI hype and AI substance. We're past the story stocks phase. Investors now demand revenue growth, margin expansion, and cash flow visibility, even if earnings are still emerging. That's why we're focusing today on two standout names that are not just riding the AI wave, they're building it: Astera Labs, ALAB, and Nebius Group, NBIS.
Perfect. Let's dive in. You've been tracking both closely. Start with NBIS. This stock exploded earlier this year. What's the story?
NBIS is fascinating, Billy. It was classified as a shell company under SEC regulations before Q3 2024 with minimal business activity. Its transformation into an AI infrastructure company has resulted in its explosive growth. We can tell from the relative strength matrix because longer-term metrics like relative strength 504-day and RS 756-day show NAN, meaning not enough history. But despite its youth, it's already generating serious momentum. Those are the 3 years and 2 years relative strength for NBIS. Technically, its RS 126 is 74.7%, well above our 50% buy threshold, showing strong relative strength over the past 6 months. On the 3-year chart, you see that parabolic run-up into $125, followed by a healthy pullback. That's not weakness, it's consolidation after a massive move. But here's what's truly impressive. Fundamentally, NBIS just turned profitable in Q2 2024. Revenue was $139.6 million, up 133% year over year, and it posted its first net income as a public company, $11.1 million.
Wait, profitable already? I thought these AI startups were burning cash for years.
That's what makes NBIS special. And look at the margins. Gross margin of 53%, and get this, operating margin of 75.7%. That's almost unheard of for a cloud infrastructure provider. It suggests an incredibly efficient, scalable model, likely through strategic partnerships and smart capital expenditure management. Now, it's still burning cash on free cash flow, about negative $28 million last quarter. But that's expected as it builds out global data centers. The key is, it's doing so from a position of strength. Current ratio of 14.6, meaning $14.60 in current assets for every dollar of liabilities. This is a fortress balance sheet.
So you're saying NBIS isn't just a speculative play. It's a real business with real profits?
Exactly. It's transitioning from hypergrowth into self-funding phase. The market is pricing in its role as the foundational AI compute layer, the AWS of AI, if you will. That's why the relative strength 126 is so strong. The technical and fundamental analysis are aligned.
Now let's switch gears to ALAB. I remember it had a huge run, then got hammered. What's going on there?
ALAB tells a different but equally compelling story. Like NBIS, it's a recent IPO, also less than a year old. So again, RS 504 shows NAN. But its technicals are resilient. RS 126 at 71.9%. And after a sharp correction from $245 down to $100, it's now recovering near $170. That shows underlying demand. Fundamentally, ALAB is further along the maturity curve. It's a fabless semiconductor company designing connectivity chips for AI data centers, critical for moving data between GPUs and memory at lightning speed. In Q2, it reported $111.6 million in revenue, up 20% year over year, and net income of $10.4 million, with earnings per share or EPS of 23 cents. But the real gem? Gross margin of 75.4%, classic for high-value chip design, and positive free cash flow of $29 million last quarter.
Positive free cash flow, that's rare for a growth stock.
It is. That puts ALAB firmly in the self-funding phase. It doesn't need to raise capital. It's funding its own R&D and growth. And like NBIS, it's got a stellar balance sheet. Current ratio of nearly 11 with almost no inventory thanks to its fabless model. So while NBIS is the explosive growth story, ALAB is the high-quality compounder, profitable, cash-generative, and embedded in the AI supply chain.
So how should investors think about these two? Are they both buys?
They serve different roles in a portfolio. NBIS is for aggressive growth investors who believe in the massive scalability of AI cloud infrastructure. It's higher risk, higher reward, but now backed by real profits and insane operating leverage. ALAB is for investors who want AI exposure with more stability, strong margins, positive cash flow, and a proven business model. It's the picks and shovels play. You don't need to pick the AI winner. You just supply the tools everyone needs. Both have RS 126 days. Relative strength is well above 50%. So from a technical timing standpoint, they're in buy zones, especially on any pullbacks.
Any red flags we should watch for?
Valuation is always a risk. NBIS trades at a very high price to sales multiple. Investors are betting on years of hypergrowth. If revenue growth slows, the stock could correct sharply. For ALAB, watch for competition in the connectivity space, though its IP moat appears strong. But overall, both are executing beautifully. They're not just AI stories. They're AI enablers with financial discipline.
Sarah, that's gold. So to recap, NBIS equals explosive growth plus newly profitable plus massive margins. ALAB equals high margin chip play plus cash flow positive plus balance sheet strength, both in strong technical positions.
Exactly, Billy. In a market that's increasingly discriminating, these two stand out because they combine vision with execution, and the numbers don't lie.
Fantastic insights as always. Folks, if you liked this deep dive, smash that like button, subscribe to BWNN, and drop your questions in the chat. Sarah and I will be back with more market intelligence. Sarah, thanks for breaking it down.
My pleasure, Billy. Stay smart, build your wealth now and not later.
BWNN is dedicated to research the businesses behind the stock names. Our research are done with artificial intelligence assistance using the best practices in the industry. The business phase growth chart is taken from Stock Simplifier. Please note that investing carries its own risk, and you should do your own research before committing any stocks to your own portfolio. Until next time, this is Billy Bob signing off from Build Wealth Now News. Trade safe.